Hello, this is Martin from Zikit, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show. We look at what happened in the market today and how we can plan for a better trade tomorrow. So, what was there in the markets today? It was bears all around. They have taken over, and the correction may extend more or not. Let's see. Right, we'll look at all of these parameters for the pre-market analysis for December 21, Tuesday, tomorrow, 2021. All of this, what you see on the left side, would be looked in the charts, and we would have additional data analysis, and we'll look at all of these parameters that you see on the right side. Right, let's get into it. The price action, look at the candles. Right, this is a bearish kicker pattern. Bearish kicker, you have a gap that is formed and just broke away, a runaway gap, whatever you call it. It's a strong bearish signal that is clearly evident here. But you can see the big size on the bottom that indicates that there is a bounce from a support zone. So basically, what kind of fall we had? 3.4% is 550 points. Have you ever seen a 550 points prior to this in Nifty? Probably in COVID times, back in 2020. After that, this is one of the biggest falls, biggest correction rather. But it recovered and then it took a bounce on the 50 Fibonacci support and then closed with only 2.18. That's 370 points down, right, as compared to the previous close. Bank Nifty also crashed to the gap down in a bearish kicker at 4.5. That's 1,550 points a single day. When recovered to settle at 3.25% down, 1,200 points nearby, right, as compared to the previous close. So big bearish day. Intraday, if you see the action, this is what happened. Gap down on the Nifty, gap down on the Bank Nifty. And then there was afternoon there was a support that is taken on the support zone 16,400 and 34,000 nearby, and then tried to do a recovery but succeeded halfway, you can see. So it did recover. So volatility is something we have to make a note, right? Till yesterday we were talking about the volatility and the sideways, indicating there is potential for a contraction that can happen in the coming few days, but now it has slipped down and Bollinger Bands of both lesser, indicating that more bearishness could easily come in. Now, where is more bearishness, or what are the levels about the resistance levels? Look at this. It has taken us about 16,350, 16,450, that's all. So that's the first support down. That's broken. Then you have 16,150, 16,200 got a good previous swing low support zone. If that's gone, then you have 15,850 to 15,950, which is a Fibonacci 61, which is very crucial. So that's where the supports are on the Nifty. Similarly, on the Bank Nifty, look at this. It had taken us about at 34,000 nearby zone today. So that's the first support. Downside, you have 32,400, 32,800. That's the zone. Then if that works, you have 32,000 nearby range. Right? The upside, first resistance would be where it slipped off from. So this gap between these two candles, today's candle and the previous candle, is going to be the huge resistance. So that is going to be 35,000 nearby range, first resistance. Above that you have the 35,600 to 36,000, that range, and then above that you have the Fibonacci 50 resistance. It's 36,000 nearby range. So that's the resistance to the upside. And Bank Nifty, the resistance on the upside would be, the first one would be to the gap that is there between today's candle and then the 17,000 levels the previous day's stop. So that is the biggest resistance now on the upside. And if that is taken out, it will be 17,000 clearing and 7,200 clearing and 17,350 clearing and then 17,500 clearing. Right, so all zones that support previous swing lows earlier, now it's going to be resistance on the upside by hit. So those are the support resistance for the Nifty and Bank. Bollinger Bands, what does it say? It's clearly understood. Intraday action is understood. Candlestick patterns, support resistance understood. Now, momentum. Nifty has a diluted because a large number of bars are there. The more the number of the bars, the less likely for the occurrence, and it is not confirmed also. The confirmation is if it moves above the previous day's low. It's unconfirmed, but there is a diluted bullish divergence that is existing on the Nifty short-term daily. Bank nothing is there. It was there yesterday, non-confirmed. Today it's no longer valid. So now divergence on the Bank Nifty, divergence dilute exists on the Nifty. Momentum otherwise clearly bearishness on Nifty and clearly in the bearish zones in the Bank Nifty, both on the short-term or daily time. Median time both are already bearish. Momentum. Medium term actually it is sideways, not bearish. Momentum. Right? Short term now both are bearish. The Nifty and the trend indicators left side we can see that it is shooting up and then the bearishness is increasing. It is DMI negative that is dominant on the Nifty and the Bank Nifty, and it is increasing because the green color ADX strength indicator is shooting up, and medium term is already DMI negative, but the strength indicator ADX, the green line is not rising up, it's falling. So medium term it is bearish, continuous. Short term very much bearishness, which is rising up also. This is thing here today. So volatility, see what happened today. 16%, actually it was 22-23% it shot up and then cooled off to 16%. So 18.9, so nearly 19 level wicks. Anything about 20, just stay out, very careful. IVS shot up to 20.88. IVP, you can see that 75.3. Remember the IVP a few days back was at 35-40 kind of line. Right now it is 75.3. If there is a main reversion of the volatility that is going to happen from here downside, this IVP is good for the option sellers, but you never know whether it's going to shoot further up beyond the 20 or not. It's but as of now it's been in the range between 15 and 20, we can say. Option analysis, if you see left side Nifty, you can see the greens get it added for the 23rd expiry of December. 23rd December expiry, basically. All this call rating that is going to add up, right? Similarly, you can see the greens have got add up today, right? Change the open interest. So the open interest analysis is showing that the highest put rating is seen at 16,000 on the Nifty, right? So we are very close to 16,000 is what the options open interest let us see. 15,500 is the next place where the put rating is there. So that is also very far away from the current 16,500, 600 levels, right? So that much volatility can be expected is what option sellers are anticipating, right? So call rating is in 17,000 highest, then 30,500. Put call is at 0.47 is at the lower end, right? It's bearish, and futures open interest for the Nifty is showing it's a short build up definitely. Bank Nifty 34,000 and 34,500 is where the highest put rating is in, but 36,000 and 36,500 is where the highest call rating is in. Again, put ratio is at lowest 0.48 and short build on the futures open interest pattern. So that's what the open interest is saying, and so this also indicates bearishness, right? So right now the market is probably at 16,600 kind of levels. Recovered, bounce back to that, and look at where the highest put rating is 16,000. Very far, right? So now the call riders are expecting that. So all it's now showing bearishness from the put call ratio as well as from the highest put rating, and right. So it confirms what the charts are saying. Look at the red all over on the heat map, right? All except Hindustan liver, all CF red. IT, this is a mistake. It's not moved up; it is moved down. Right, 2% down. Metal nearly 4% down. Auto 2.5% down. Pharma 0.5% down. FMCG 1% down. Reality is 5% down. That is a hopeful sector. It's rally. Yeah, but so except for IT, all of them the momentum is bearish in the short term, but IT is sideways. So just have to wait for the momentum to pick up for a sectorial pickup on any of this on the long side. institutional participation that has not come, but FIs might have sold heavily. It might not have compensated what the DI bought today, most likely. The entire month it is selling, previous month also entire month it is selling, and it must be more than 1,50,000 crores of selling that might have happened by now since last several months from the FIs. And this is a worrying thing, and that's the only reason the market keeps on falling down. Now dollar is cooling off. USD INR shows currency pair is cooling off at least. Dollar index is consolidating, I'd say, but today it's not green and it is hovering around the same after it is broken out from the two major resistance levels. Global markets all over, you can see it's a sea of red. Some markets are not open, Dow Jones is not open, but otherwise all sea of red. So the entire globe seems to be panic on something, and that is indicated in their indexes. Crude oil is cooled off. Yeah. So when there is a panic on the COVID, obviously crude oil will cool off. It has fallen down below the 70 once again after trying to climb up again. Gold had tried to break out when the market falls the previous day, but today it did not make big moves, and it seems to be taking the comfort of sitting in the same support zone right forever, probably. Yeah. So as long as gold is not showing big spikes, it gives a hope that the crash may be short-lived, probably. Two actionables, it is in bank short and Tata Steel also short. Why short? Because the volumes are less, momentum is bearish short term, trend is turned and rising bearishness of the trend. Tata Steel similarly, volumes are dipping, momentum has crashed to bear zones, trend is rising bearishness, and candlestick patterns are falling down with big buoyant range bearish red candles with a gap. But this trade at a steel can be initiated if you see that the moment there is a break of this major support zone, only then you have to do that. Similarly, you can keep that as a stop loss also after you entered. So that is the two actionables to wrap up. Moderate bearishness in the short term is what my view on the market is, right? So it's moderate bearishness because of some obvious reasons, like the chart pattern shows that, the short term resistance level, support level shows that, the momentum bearishness, the trend bearishness, all of this, and along with the institutional selling, it's confirmed that it has to be nothing but bearishness, right? If you're reading the charts. Now index has now crashed 11.5%. That's the longest correction since the last 20-month rally. Right? So almost 2 years is the biggest correction that happened today. 11.5%. There is scope for more correction. That's what the point in the bands is saying. Because it was contracting till yesterday, and today it spilled over on the lower side of the bands on the downside. VIX has shot up suddenly. Almost 20% of India VIX shot up. Fear and greed is high, and anything about 20, you have to be extremely cautious. Probably just time to research on some quality stocks and then do systematic small tranche, long-term investments of quality stocks at reasonable price. Maybe some will do at this times of market cycle. Right? Short side option buying and selling can give trading opportunities provided your stop loss are well placed and your hedge with vertical bear spreads. And also, if your hedge positions, the position sizing rules are also maintained well, right? So you can still, there is trading opportunities in the market as well. As long as it's trending, it is fine. Right? But anything above the volatility 20, whether it's buying or selling, you have to be extremely cautious because markets can be highly volatile, highly choppy, and take away all in a fraction of a second, right? So that's a view, and I hope this helps you to form your own view. If it helps in any way, consider hitting the like button and then share it to friends and colleagues. So it benefits all of us. Thanks for watching. Happy trading, happy learning. Bye.